If you're thinking of investing in real estate and don't have a ton of cash, you've probably heard of hard money. In this video, I will explain exactly how hard money works, including the process start to finish. So let's get started. Hi y'all, my name is Lori Livers. I am a real estate investor and I hesitated for way too long in starting my business because I didn't have tons of cash lying around and I did not know how hard money works. Once I learned about hard money, I was able to use it to get to where I want to be and I haven't looked back. Now hard money sounds scary, but it is not at all. All it is a short-term, high-interest loan used for purchasing and rehabbing a property. That's it. Right now, as I'm filming this video, hard money rates are right around 6% for me, and my most common term is for 90 days. The rate and term may be different for you, but this is my most common deal right now at the time of filming this video. Please, do consider hitting that like button down below. It helps me out in a really big way that I cannot do without you. Now, here are all the details on the process of how hard money works. First, you will select your hard money lender and get pre-qualified. I talk all about how to do that in this video here, so check that one out. Next, you'll select your property based on your specific criteria that you're looking for. And I talk all about what I look for in a property here. Once you have your property picked out, you contact your hard money lender that you're pre-approved with and tell them what price you're purchasing the property for, the details on the cost of your rehab, and what your expected after repair value is when you're all done. The hard money lender will look at the details and send out an appraiser to check your numbers. I pay around $550 for this anticipated ARV appraisal. The way it works is that the appraiser will meet you at the property and will provide you and the lender the after repair value of the property as if everything in your rehab plan has already been completed. Now, generally speaking, you can borrow up to about 75% of the after repair value of the property. This 75% needs to cover both the purchase of the property and the cost of the rehab. If the numbers line up, then you're clear to close on your hard money loan. When you close on a hard money loan, you go to your title company and sign all your docs and provide the down payment you agreed to in your pre-qualifying process. Once everything is signed, the lender will send money to the title company and the title company will pay your seller for the property. You own the property and it's time to get your rehab started. But first, let your long-term lender know all the details about the property so they can get started on your long-term financing. You want this long-term loan ready to go as soon as you finish your rehab. So timing is really important here. Now, the lender money designated to pay for the rehab is not dispersed to you or to the title company. That money is held by the hard money lender until part of the contractor work is completed. But no, you are not paying interest on any money that has not been dispersed or paid out to you. So they are holding the rehab funds, but you are not paying interest on them until you're reimbursed for the rehab that you've paid for. And this is why you want to make sure you work with a contractor that works on a draw schedule so that you can pay them as you go, because this is how you will collect the rehab money from your lender as you go. Rehabs are usually paid for in 4 or more stages. You pay your contractor a percentage of the job to get started, and once some of the work is completed, you reach out to the hard money lender and tell them what is done. They will send out an inspector to verify the work you claim to be done is actually done. Then they will wire the cash to you to cover that expense for that portion of the work from your rehab funds that they're holding. You will go through this process a few times until all the rehab work has been done and everything has been paid for. I hope that makes sense. Let me know in the comments if you have any questions about this one. It may not be as clear as I think it is. I'm not sure. Let me know. Once your rehab is done, let your long-term lender know so they can send their appraiser out to provide a final after repair value for your property. When all the details are lined up, you will schedule a closing at the title company for your long-term lender, just like you did for the hard money lender. Your long-term lender will pay off the hard money lender with the proceeds from your long-term loan. And this is what gets you out of your hard money loan. Hopefully, you've already got your property rented and you've created the cash flow you're looking for from this property. Good job. That's it. That's the breakdown of exactly how hard money loans work. I hope you've learned that they're not hard to work with at all. They're a useful tool that allows a lot of us to get into the real estate market when we wouldn't have access otherwise. Most of us start with hard money. Then, as our portfolio matures, we create the working capital we need to grow our business, and we don't use hard money much after that. What do you think? Would you use hard money to get started? To learn more about exactly how I work through this process, please do consider subscribing to the channel. I share all the details, good and bad, and don't let anyone tell you there's no bad. I would love for you to come along on this investing adventure with me. Right now, I'm waiting for you in this video you see on your screen. What do you think? Do you have a few more minutes to hang out? Until I see you over there. Bye, y'all. Wow, look at the hair. Now. Boy, I'm yelling now. Now! Wow.